Okay guys, so I'm going to do 2015 question 1. It's a sole trader question, so I just said I'd do one of these with you because I haven't done one in a while. I had a bit of a technology issue with the video, so I did record this but then it didn't work, so that's why I actually did it twice, and this is why now I've just reversed it to talking through my working, but from interest onwards it should be okay. So the first working is stock of resale for resale at the end of the year was €19,000. So I've just written in stock of €19,000 and where it goes. That's your closing stock. I know it's closing stock because it says the 31st of the 12th, 2014. So the €19,000 goes into your current assets in the balance sheet and it also goes into the trading account. Then second working is stationery. So it says stock of stationery at the end of the year was €1,200. So the first thing I did, well, the way you think of this is if you think of the office downstairs in the school, they at the end of any year they will have some form of stock left over, some form of stationery that they won't use until the next year. So maybe paper, staples, sellotape, whatever. So the first thing you need to do is go to your trial balance and see how much they spent. So if I look at the trial balance, they've spent €4,800. Of that, €1,200 was not used. So if they haven't used that, it should be included in this year's figure. So I'm taking 1,200 from the 4,800, which leaves me with a charge for the year of €3,600. So the amount that they actually use this year is your admin expense, and then the stock is your current asset in the balance sheet. The next working then, so that's all you have to do for the stationery. Next is your interest. So it says provision should be made for interest due on the loan. And the rate of interest is 6% per annum. So first thing you need to do is go and see what the story is with the loan. Go up into your trial balance. It says term loan received on the 1st of April 2014. So we got a loan of €50,000 on the 1st of April. And the rate of interest is 6%, but that is for a whole year. So if you had the loan for a whole year, you'd be paying 6% interest. We didn't have that loan for the whole year. We only got it on the 1st of April. So we had it for 9 months. Be careful, it's 9 because we got it on the 1st of April. If it was at the end of April, then we would have only had it for 8 months. But because we got the loan on the 1st of April, you need to start counting from April. So April, May, June, July, and so on. So €2,250 is the amount that we should be paying, and that's the figure that goes in at the bottom of the profit and loss. In ordinary level, always check and see if there's any interest paid. We have interest paid of €1,000. So of the 2,250 that we have to pay, we've already paid €1,000. That's from my trial balance. It's the fourth last thing in the trial balance, €1,000, which means that I have a due figure. So the amount that we still have to pay is €1,250. It's not a good thing for us to be owing the money to the bank, so that's why it's a current liability in the balance sheet. You need to be paying that back within 1 year. So the next working is your wages and salaries, and it says they're to be divided. So 75% of them are for the employees, so 75% is for the actual business expense, and 25% is drawing. So you need to split it. So 75%, put into your calculator 105,000 by 75%, which is €78,750. And then your 25% is the remainder, so 105 by 25%, which gives you €26,250. So this is your business expense. The 75% is the business expense. That is admin. Wages and salaries is admin in the profit and loss. And this is going towards drawings, which means that that amount of money needs to be added to the existing drawings figure. So check and see, do you have drawings in your trial balance already? Which you do. Drawings from your trial balance are 10,700. Add on the 26,250, which gives you a new drawings figure of €36,950. And that's the figure that's going into the financed by, and it's a minus, you're going to be taking that away. And that's that working done. The next working then is advertising. It says advertising is for the year ended 31st of the 4th, 2015. We are doing our accounts up until the end of 2014, so we have 4 months prepaid for next year. So what that's basically saying is they paid advertising for a year, so the figure that's in the trial balance of 5,700 is actually for 12 months, but 4 of those months are for the following year. So the 4 months are for 2015. So you need to find what 4 months out of the 12 months is, which is €1,900, and they are prepaid. So of the 5,700 paid, 1,900 is prepaid for next year. So you need to take that out and find out how much is actually for this financial year. So 3,800 is a charge for the year. So now label your workings, charge for the year. Advertising is related to selling, so that's the selling and distribution expense. And the prepaid figure at the end of the year is good for us to be paying things in advance, current asset in the balance sheet. And that's that working done. Next is your depreciation. I'm just going to move this up slightly. Next working is depreciation. We've got 3 different assets that we have to depreciate. I'm going to start with buildings. So working 6 is depreciation. Depreciation and it's buildings. Okay, so go to your trial balance, check and see what the value of your buildings are, and we're depreciating them by 10%. So they are €300,000, 10% depreciation, which is €30,000. And check, always do this step. I always get my ordinary level students to do this step anyway. Previous depreciation, write that in, whether there is or not, always follow the steps. Check and see if there's depreciation previously written off. If there isn't, 0. So it leaves our new depreciation figure. So our new accumulated depreciation of €30,000. So this year's charge is going into the admin expense in the profit and loss, and our new accumulated depreciation is going into minus the fixed assets in the balance sheet. The next depreciation then is delivery vans. Delivery vans. So the delivery vans are to be depreciated at 10% of the net book value. So go to your trial balance and see what it tells us about the delivery vans. We have them at cost. They're worth 63,000, and then it gives us the accumulated depreciation that we already have written off of 14. So you need to take them away to find the current net book value. So our current value is 49,000. That's your net book value. And you are depreciating 10% of net book value. So 49,000 by 10%, which is 4,900. Add on your previous depreciation then, plus previous depreciation of 14,000, and that leaves your new accumulated depreciation being 18,900. New accumulated depreciation. So your charge for this year, 4,900. That's an expense. It's for delivery vans. They are used to deliver stuff. So that is a selling and distribution expense. And this 18,900 gets taken away from your fixed assets in your balance sheet. The next asset to be depreciated is your office equipment, and they're asking us to depreciate it by 20% of cost. So first thing first, get your cost from the trial balance, which is €22,000. We're depreciating it by 20% per year, and that is 4,400. So you don't need to worry about dates or anything here at ordinary level, just straightforward. So our charge for this year is 4,400, and that is going to be our admin expense. We can't say that office equipment is generally directly related to selling and distribution, so that's why it's going in admin. Then you need to check and see what our previous depreciation is. Previous depreciation. So in this, for office equipment, it gives us the cost in brackets and of 22,000. And then in the trial balance is actually 15,000, and that 15,000 represents the net book value. So you have to find what the previous depreciation is by taking those away. So 22,000 minus 15,000, which is of course €7,000. So this year we've written off 4,400. Our amount that we've written off in previous years is 7,000. Add those two together and it gives us our new depreciation figure of €11,400. And that's the figure that will be taken from our fixed assets in the balance sheet. I'll just label that as well. New accumulated depreciation. So if you follow that step of saying add previous depreciation, add previous depreciation, add previous depreciation, just get you into the habit, and even do it even though there is none there. That's not to say that there won't be depreciation on buildings, there could be, so just get into the habit of doing it. Last working then is provision for bad debts is to be adjusted to 10% of the debtors. So get your debtors figure from the trial balance. We haven't adjusted this before, so our debtors is €34,800. So we are saying that there's a chance that 10% of those debtors won't pay us. So we're going to write off €3,480. So straight away, that new provision is the one that's going to be taken away from our current assets in the balance sheet. So when you're doing your balance sheet, you're going to have debtors of 34,800, less provision, and you're going to have your 3,480 in there. That's always the first step, and it's the first one that always goes in with your assets. Next thing you need to do is check and see what the old provision is. So go to your trial balance. It should say provision for bad debt somewhere. Yeah, it's there towards the bottom, and there's one in place from last year of €2,500. So last year we said €2,500 worth of people probably won't pay us, but this year it's gone up. So that's not good for us. Okay, so it's an increase. And it's increasing by €980. Now that's not good for us to be saying that more people aren't going to pay us this year. So when it's an increase, it's a selling and distribution expense in the profit and loss. And if it's a decrease, then if it's the other way, then you put it in as income. Okay, so that's all your workings done. They're straightforward. There's nothing really hidden that you need to be looking for either. So this is the solution. I just pulled it up on EGS accounting. So things to be careful of at ordinary level is, especially because you've all been doing higher level for so long, you need to be looking for returns. Now I know returns don't really come up a higher level, but they're there a good bit on the ordinary level paper. So as you can see there, we've got sales of 485,000, letter sales returns of 17,000. So they're coming straight from the trial balance. Now be careful, because sometimes it might just say returns and not label them. So you need to know that if sales, the actual sales are always on the credit side. So if you have returns on the debit side, then they're sales returns. And the same with purchases. So your purchases are always on the debit side. So if you see returns that are sitting on the credit side and it just is labelled returns, you need to know that that is purchases returns. So that's your sales. Then we have less cost of sales. You have opening stock of 29 coming straight from the trial balance, purchases coming from the trial balance as well, and less purchase returns of €5,300. Then, so the layout is all the same. Your closing stock of €19,000 taken away then, and that gives you your cost of sales. Take that €200,700 from your net sales of 468, and you're left with a gross profit of €267,300. Next, you can see there is your expenses. Be careful, look at those. You're getting a mark for the administration and for the selling and distribution heading, so make sure you're putting them in. You can see there as well, you're getting higher marks for the workings, for the figures that you actually had to adjust. So general expenses you didn't adjust, so you're only getting 3 marks for that. Whereas wages and salaries, we had the adjustment for drawings, so you're getting 6 marks. So you can see where the marks are going there and why some figures are being awarded more marks. So they're all straightforward. You've got your 2 depreciations in there, your insurance, stationery. So it's really important that you are, if you adjust a figure, put a line through it in the trial balance, and then that will remind you then that you have adjusted that figure, put in the new figure so that you're getting your proper marks. In your selling and distribution, we have the 3. Advertising, we adjusted that of 6 marks. Provision for bad debts of 980, that's the increase, which was in the last working. And then we have a depreciation of delivery vans, which we also did. Then we have add gains, if you want to call that add income, that's fine. And that's coming from your trial balance, and it's on the credit side. So if you're ever looking for incomes, be looking on the credit side of your trial balance. So on the credit side, you're going to have gains and liabilities, and on the debit side, it's all assets and expenses. So use that rule to help you narrow down what's an expense and what's a gain. So once you have your discount added in, you have your operating profit, and then you take your loan interest out, which leaves you with your net profit for the year. You need to then check and see, was there profit and loss balance from last year? Yes, there was. It's the very last thing in the trial balance of €65,000. So if that balance is on the credit side, you add it on. But if it's sitting in the debit side of the trial balance, then you need to take it away. and that's the profit and loss account. The balance sheet then is very straightforward. It's the same layout as what you would have done at higher level. We've our intangible and our tangible fixed assets. I do them the other way around, so you're probably used to seeing them with intangible second. If you want to, you can do it either way. It doesn't really matter. Just make sure that you have your total. So as you can see there, just under the fixed assets, the 348,700. That figure is coming from your patents, the 24,000, plus the total of the net book value of 324,700. And that's actually the reason why I do the intangible fixed assets second. It's just so it's a bit easier to get your head around using the 3 columns. Then your current assets, you've got both your stocks, so make sure you're putting both stocks in there. Your debtors then, less your provision. Your bank, you need to always check and see what column your bank account is in. In this question, it's on the debit side, which means that it's a current asset. And if that was on the credit side, then it would mean it was a bank overdraft, and that would be a current liability. And then you've got advertising prepaid coming from the workings. Then in your current liabilities, your creditors' amounts falling due within 1 year. You have creditors, VAT is coming from the trial balance, loan interest, it's coming from our workings, and PRSI and USC is coming from the trial balance. You don't need to really label working capital. You can if you want. You won't get any extra marks for it. So that leaves our net worth, or our total net assets is what I'd call that, at 394,070, and that's the first balance. Your next section then is your financed by. So where does this company get their money from to finance a business of that amount? So first of all, they have amounts falling due after 1 year, things they need to pay back after a year, of 50 grand. So they have to pay a loan of 50,000 euro. That's coming straight from the trial balance. That's the loan itself. It's not actually the interest. So the interest goes into the profit and loss account, and the loan itself goes into the into the balance sheet. Then you have your capital. That's coming from the trial balance. So capital is money introduced to the business by the owner. And then we have our profit and loss balance. So that 183,220 is actually being carried from the bottom of our profit and loss account, which then leaves the last thing is your drawings. So stock, cash, items of value that have been taken from the business by the owner, amounting to 36,950. That's also coming from your workings. You take that away from the 381, which leaves you 344,070. You add that then to your 50,000 and you get the balance, and that's it. So if you have any questions, just send me an email. I'd have no problem helping you out.